Hello everybody, welcome to the midweek market catch-up, should we call it? I'm David Jones. We do these regularly on a Friday where we look at a mix of different markets, indices, FX, commodities, all of that sort of stuff. And I thought I'd try it out on a Tuesday as well, Tuesday night during January. Have a look at some of the big stuff, a quick whiz through all the various markets to see what's going on. Not too much has changed since Friday's update, but for me there is still some interesting stuff out there, particularly I think when it comes to stock markets and the oil price. But before we get into it, let's just have a quick go through some of the housekeeping. So this presentation is only for educational purposes. It does not contain and should not be construed as containing investment advice or an investment recommendation, or an offer of or solicitation for a transaction in any financial instrument. David Jones accepts no responsibility for any use that may be made of these comments and for any consequences that result. You should consider whether you understand how spread bets, CFDs, futures, foreign exchange work, and whether you can afford to take the high risk of losing your money. Trading is risky. Okay, major announcements. There's quite a lot in the next few hours actually in the Southern Hemisphere. So a bit later on today, I think just before midnight, my time, here in the UK, we've got New Zealand inflation out. Clearly inflation, big global issue over the last 8 to 12 months. Let's see what the New Zealand inflation numbers look like. And then, early hours of Wednesday, we've got the Aussie inflation numbers out. So perhaps some volatility in the Aussie dollar, New Zealand dollar markets overnight. Let's see what they look like tomorrow. And then tomorrow we do have the Canadian interest rate decision. So again, because of inflation, clearly interest rates are being closely watched at the moment, what banks are doing with interest rates. So let's see what that does. But probably the big one is Thursday, US GDP. So how well or not is the US economy doing? So the latest US economic data. So perhaps tomorrow we could have perhaps something of a quiet day ahead of Thursday's US GDP release. But let's see what that looks like. I'm just going to have a quick look. Let's see what the market is expecting for that. Because as ever, it's all about what the market expects rather than is it actually good or bad. So if I scroll down, so US GDP, 2.8%, I think, is the consensus. Yeah, 2.8% annual growth is the consensus for the US data on Thursday. So let's see. So that's 1:30 UK time on Thursday. Let's see how that squares up the actual release versus what the market was expecting. So that's the big data, I think, for me this week. A quick word from our sponsors, then we'll get into the markets. I do a trading course. I talk about it on the various live streams we do. There's medium-term trading. There's shorter-term trading. So medium-term, looking to hold a position for weeks and sometimes months. Shorter-term trading, hours and sometimes days. 11 video lessons on the medium-term course, 7 on the shorter-term course, and 4 live webinars with me the first Thursday of every month. It's all included in the course. I've said before, I ran an account with real money when I launched the short-term course in the end of October, beginning of November. I said I was going to trade an account with 4 grand in, using the principles outlined in the course, because I think most courses out there talk about the theory of it and maybe back test results, but don't actually do it in real time. So I said, I'm going to do this and trade it in real time. So I've showed it on the YouTube channel over the last few months. I've talked about it in webinars with people who've attended the course. And over the last 3 months, 90 days, it's up £2,010. So I've seen a 50% return on this £4,000 account since the end of October. And of course, I have to say that past performance is no guarantee of future performance, but that's to give you an idea of how I've done trading this account using the principles outlined on the course. If you'd like to find out more, because I understand it's difficult to know who to trust and who to go with. I did start inviting old attendees to leave me reviews on Trustpilot. So at the moment, they're all seven 5-star reviews. If you look up David Jones Trading on Trustpilot, you'll see the reviews there and the comments from people who've done the course already. I launched a weekly newsletter over the weekend just gone, free of charge. If you go to my website and scroll down to the bottom, if you put your email address in, you get the newsletter every Saturday. I've also put in the link for this video a link to the last newsletter, so you can read it from Saturday. The website is jonesthemarkets.com. Go there to find out more. And of course, any questions, drop me an email, dj@davidjonestrading.com. Okay, that's it. Let's take a look at the markets. So for me, what's interesting this week? Well, we're only 2 days into the week. We did the usual end of week live stream on Friday. Stock markets are still interesting, particularly US stock markets. So we've had this downtrend now. This is the S&P. We've had this downtrend since January last year. And whenever we've come back to this line, the markets run out of steam. We had a bit of a spike through it in mid-December last year. We're threatening it again, but for me, the really big level to watch on the S&P are these highs right at the beginning of December. So 1st of December, highs up at 4,100. So for me, we had a good day on Friday, we had a good day yesterday, and we've had a bit of a nothing day so far today. So for me, I would still be looking to sell short until and if 4,100 gets broken. So it's a really interesting week, particularly, of course, bearing in mind we do have this US GDP number coming out on Thursday. Perhaps, I mean, you'd expect that to cause some volatility one way or the other. For me, I'm still not convinced that this downtrend in the US stock market is over. I want to see 4,100 broken. If you have a look at something like the NASDAQ, you'll see a similar sort of thing here. So this is the NASDAQ 100. So again, the market spiked higher mid-December to 12,200. This is the trend that's been down on the NASDAQ since the end of December 2021. That's where I've picked it up from. So for me, it's almost the perfect area to think about going short. But either way, I think it makes for a really interesting couple of weeks in US indices. Are we going to finally see these big downtrends broken? So I'm still leaning towards these markets running out of steam. If we look at, we looked at markets at the DAX before on the Friday session, that broke its downtrend back in November last year. Some of these European markets look very different to the US markets, but it is quite interesting that the likes of the NASDAQ are still within their downtrend. We haven't seen a new low for this downtrend since mid-October. So that's a couple of months ago, 3 months ago now, isn't it? We've not seen a new low for the NASDAQ. Will we finally see it crack through the highs from the last quarter of last year and start to reverse? Let's see what happens. But for me, interesting markets to watch the next couple of days, particularly bearing in mind the US GDP data is coming out. The other interesting market, it is the one I mentioned in the newsletter over the weekend, is oil. So this for me was the market to watch this week. At the end of last week, I said this is the market that I'm going to be keeping an eye on. And it's for similar reasons to those stock indices. So we've had since June of last year, so we're 7 months into this. 7 months into this oil downtrend from 124, touched 70, near enough, in early December. We've seen a rally over the last couple of days, or the last couple of weeks, I should say. But if you zoom in, 83, 70, let's call it 84. Let's say $84 a barrel has been a barrier for crude oil since early December. So 6 weeks ago, we saw this high, and it's repeatedly failed up here. And again today, we've seen a big turnaround. So for me at least, it still looks like 84 is a big barrier for the oil price. So even though it's had a look through that downtrend, nothing's changed for me. Let's see what the rest of the week brings for oil. But for me, $84 is really the line in the sand for oil for now. If it breaks that, then it does start to look that perhaps we're seeing the first steps to a reversal of this downtrend in crude oil. But for me now, quite happy to go short with stops somewhere above 84. I loaded up the natural gas video on the channel yesterday. It did really well. I was surprised actually. I thought it was a bit of a niche market, natural gas, but it's been the best performing video so far. And I went short natural gas today. It's a bit of a fluke in the end, but I ended up going short about lunchtime today, natural gas, because I was saying in the video from yesterday, even if it bounces back from where it was yesterday, which was down here, look to sell short. So for me, I went short natural gas. It's really weakened again. If we go back on the daily chart, just absolutely slammed again today. So for me, natural gas, $3 is the big level to watch. If you see it break through 3, I think, as I said in the video yesterday, perhaps the next target is around, I don't know, 2.5 from maybe April 2021. Let's see what happens. But quite a bit of volatility in the gas price today. Let's take a look at some other markets. Gold. This has been. I found this quite a frustrating market. I was long gold at the end of last week. I came out of it yesterday, and it broke higher again today. And actually, in gold today, we've seen yet another high for this uptrend. So the price of gold has hit its best levels since April 22. So what's that? 9-month high on gold today. If you look on the hourlies, you can see some of the choppiness. So I got taken out yesterday out of my long and it spiked lower. And then frustratingly today, it did move higher. And then it did a massive sell-off and the bounce back. But for me, gold is still, from a short-term point of view, a buy the dips market. If I looked on the daily chart, I'd much rather see perhaps a deeper sell-off. But you can't question this uptrend that we've had in gold since those November lows. So that's what, November, December, January, nearly a 3-month rally in the price of gold. I do wonder if it will start to struggle pretty soon. You know, we've got these old highs from on the way down from April last year. I mean, they're not till about $2,000 an ounce. So there's a bit of headway up there. But let's see. I'd much rather see a deeper sell-off from gold from where we are now. And let's see whether buyers come back in. But that's a market that still remains strong. If we take a look at some of the currencies, I bought euro dollar yesterday on the dip below the, it made new highs yesterday, the euro against the dollar, new recovery highs. So back to where it was in April of last year. Sold off a bit during the day. It's bounced back a bit today. Again, so for me, as a short-term trade in euro dollar, I think it's an interesting trade. It's not done that much today. Medium term, it's a bit like gold, you know, because we have seen such a pronounced run of dollar weakness. You know, these markets have had quite the lift. Again, for the euro against the dollar, I think what will be interesting as the weeks and the months go on, when we get a deeper sell-off and perhaps we see this market knock back to where it was perhaps at the beginning of the year, down around 105, 106, and do we see the buyers come back in? Let's see. But again, you know, you can't really deny the strength. The thing yesterday, you know, just yesterday, hit its best level for 9 months. Let's take a look at pound against dollar. Pound against dollar, perfect, almost perfect short. If you thought the pound was going to run out of steam, then and clearly nothing today is financial advice. But this is the level to go short. You know, we saw the market, so pound against the dollar, bounce back from, 103 in September last year, up to 124.50, let's call it, in December. Sells off near 118, bounces back. Where does it stop yesterday? Again, 124.50, and we've backed away from it today. So I think, you know, from an FX point of view, perhaps this is an interesting market to watch. Is this 124.50 the line in the sand for the pound? And we're going to see the market drift back to 118. Let's see. But again, from my point of view, if we saw 124.50 broken this week, it looks like another valid breakout, you know, and my target would be for a run to maybe these old highs, 126.50. from June of last year. Let's see. Let's see what it looks like. But pound against the dollar, still struggling with 124.50 up there. What else? What else has been interesting this week? I mean, it has been, I think, a bit of a struggle. For me, stock indices and oil are still the interesting markets. I'm still long sugar. I think I talked about this. I put the trade on in sugar last week. It's not done much. There's the hourly chart. It's having a good day today. I think when we looked at it Friday, it was down here. So it's moved a little bit higher, but nothing too exciting. I think what has been moving is Bitcoin. Let's go back to the crazy world of the cryptocurrencies. I am absolutely expecting this move to run out of steam, but on the dailies, this is interesting. Then we've got Bitcoin at 23,000. So the market has gone from where were we? End of last year, 16.5. So it's up what 40% for January. It's still down, obviously, a bucket load from where it was November 2021. But perhaps this is the start of yet another run of craziness in Bitcoin. I mean, personally, I would rather wait for a bit more weakness. Let's see if the buyers come back in. So I think for me, if we treat it like any other market at the moment, I'd treat it as yet another rally that's going to run out of steam. But the test will be when it sells off, where do the buyers come back in? So I think that's still, I'm in no hurry to do anything. And I can't even remember the last time I traded cryptocurrency. But I think it's an interesting one to keep an eye on. So I think we'll keep coming back to this on the Friday live stream. So I'd be expecting it to run out of steam. And again, I think it's one of those things, if it does start to sell off, I'd expect perhaps quite an accelerated sell-off as everybody who's seen a bit of a rally then panics when the thing turns down because they've been so beaten up since November of 2021. But a much more interesting market now. You can see the extent of the move. Looking at the RSI, this is the most oversold Bitcoin's been since January 2021. So on a 10-day RSI, we're at overbought. Sorry, not oversold. We're at 2-year overbought levels. So I think the world of crypto has got interesting again. When Bitcoin is at 500,000 by year end, I'm going to refer back to me saying in January the world of crypto has got interesting again. We'll see. We'll see what happens. So that's it really. I'll jump into some of the stuff that you want to look at. So for me, the rest of this week, S&P and Nasdaq, because the trends are still down. There's the S&P, there's the Nasdaq. So I'll be looking to see these stock markets to run out of steam. Oil, because again it's a similar setup as I flagged up at the weekend in that newsletter thing. Oil, because again 84 is proven to be a ceiling for the market, and a bit of a left field one, pound against the dollar, because we have seen this big run up for the pound. Clearly, if you're in the UK, lots of UK political stories in the news again this week. But 124.50, I think, for pound against the dollar. Let's see. And we do have a bit of, I suppose, is that bearish divergence? I think you could say that's bearish divergence. Or we do have at least an RSI that's gone overbought. So let's see. Let's see what happens. So a few interesting ones, I think, to keep an eye on there. And we do have this Thursday release of the US GDP. So let's see what that looks like when that comes out. So a quick plug again. Trustpilot for my course, David Jones Trading on Trustpilot. Thank you very much for those of you who've been on the course and were kind enough to leave a review. I do a newsletter every Saturday. What's hot, what to watch, and trading tips. If you go to my website, jonesmarkets.com, go to the bottom of the website, you can sign up for the newsletter. Any questions, drop me an email. Okay, let's have a quick look at any of the questions coming through. Let's see if anybody wants anything. Looking at IAG. No tailspin yet, says Kevin. So that's IAG. International Consolidated Airlines. Oh my God. You're right. That just continues, doesn't it? So this is, so amongst others, I think it owns, does it own it? Well, it owns British Airways, doesn't it? Does it own Doesn't have Ryanair, does it? No, I think it's Aer Lingus. One of the Irish airlines that owns as well as I think a Spanish airline. That has had a heck of a move, because I do remember looking at this in a live stream when it was perhaps here, and I would absolutely be looking to go short, looking for the thing to run out of steam, which is why, of course, we have stop losses. Still strong. I still wouldn't buy it though. I would struggle. I do struggle with buying into absolute runaway markets like this. And the problem is, of course, if I'd decided it was going up there and was waiting for a pullback, the pullback's never happened. So that is the drawback for me, not being able to buy into runaway markets. But no, an absolutely fantastic run there. I'd rather wait for the dip, but I've been waiting for the dip for a while on that one. Let's see what happens. I mean, 180 is a big barrier for these. I mean, it's still 10% above where we are now. Let's see what happens. But no, I would absolutely have been wrong-footed by IAG this month. Euro yen. Let's take a look at euro yen. So the euro against the Japanese yen. Let's take a look. I did trade this in the past. I can't remember when I did trade it. I think it was about here somewhere, and caught a bit of a move up. I can't remember. But okay, let's have a look at this. Let's get this RSI out of the way. So let's take a look at the trend since that's 2020. So the 2020 lows. Oh, they're not that relevant, are they? And I suppose there isn't really a trend there. I'm not sure where that trend line's coming in from. What I would go short. There we go. Let's cut through all the chaff. So I would go short euro yen. So we've had a bit of choppy trading going on. You could sort of make an argument that we have higher highs, higher lows. We've got a gradual uptrend going on since March of last year. But then you could also make the argument you've got a downtrend going on. And of course, that's what makes a market, is differences of opinion, where some think it's a buy, some think it's a sell. For me, it would be a sell, because we've had this ceiling that's been in place for the last 3 weeks now, 3 or 4 weeks, around about 142.94. So for me, I'd go short 141.50, wherever it is now, and a stop maybe at 143.50. So I'd have a couple of 100 points risk, but maybe if it drops back to where it was the lows from the beginning of the month, I've got 300 and a bit points downside there. So for me, that looks like a short. I mean, it's quite choppy, isn't it, over the last 6 months or so? But for me, I'd be leaning to the short sides on that one. But it's quite interesting. I think if we flip it to the hourlies, we'll perhaps see a bit clearer. There we go. So if you look at that chart, since the end of December, it has historically struggled up here. The more patient may wait to see if we get a bit of a run up to 142.5. But for me, 143 has been a bit of a ceiling on euro against the yen. Iberia, thank you, Richard. Iberia was the other airline that's in the IAG. Take a look at Oxy. So there's some New York Stock Exchange glitch today. Oxy, Occidental. Let's have a look. What happened then? Oh yes. Oh god, that's weird, isn't it? Let's make that a 5-minute chart. I must admit, I didn't see it. But that looks like it traded normally, though. Did it not have results? Because it started trading pretty much. Let's have a quick look at the S&P. Was there a funny opening for the S&P? 230 on the S&P. Not massively. I don't know. I don't know what the glitch was. But for me, I never look at stuff that short term, so I wouldn't notice it anyway. Tesla, yes, I'm doing a video on Tesla tomorrow for the channel, because their earnings are out tomorrow night, aren't they? So I'm going to do a Tesla video tomorrow daytime ahead of the earnings. So, I mean, it's interesting because it has broken out the downtrend. I must admit, I would still be looking to sell short Tesla. I mean, what's the rally? It's a 40% rally in Tesla since the 6th of January. So I think it is interesting going into the earnings. I would, if they popped higher on the earnings, I'd be tempted to sell them. So for me, I often say, just because a trend line breaks, I will always disbelieve the first break and look to sell shorts. But you know, absolutely a great run since the 6th of Jan. But for me, I wonder if they're going to have at least one more look at $100. You know, if this really is a turnaround for Tesla. Let's see. But we have those earnings tomorrow night. I'll do the video tomorrow, so I've looked at them in a bit more detail. But I would, if I had to do a trade now, I would go short with a stop above 150. That's what I would do now on Tesla. So we'll see. RRU. What is RRU? Rolls-Royce Holdings. Is it Rolls-Royce? So Rolls-Royce. Okay, and someone else has asked for Rolls-Royce. Right, hold on a second. Let's look at the UK listing of Rolls-Royce. There we go. Oh, it's run even higher. So, as I often say, this is Rolls-Royce, the engine manufacturer, not Rolls-Royce, the car company. So, Rolls-Royce, the car company, is owned by BMW. So these are the engines that go on the planes. And again, this is another one like IAG. This is maybe why I don't trade stocks. But I would absolutely have been selling it short here in the mid-90s. Ahead of, £98, £1 a share, and it has just blasted higher. This explains, I suppose, in some way why we're seeing that the FTSE 100, the UK index, doing so well. So I would be a buyer on dips on Rolls-Royce now. We've broken out through 100, came back, bit of a retest and pushed higher. So I would be a buyer on dips, although I never actually trade stocks. But I would be, yeah, if it's sold off, let's say it's sold off to the 105, 106, it looks an interesting trade with stops the other side of 95 maybe on Rolls-Royce. So yeah, let's see. We looked at Tesla. Is coffee about to break out? We looked at coffee, didn't we, on when was it? On Friday. And I remember saying, I think it's going to squeeze a bit higher, and it has squeezed a bit higher. It had squeezed a bit higher. See, for me, it depends where you draw the trend line, doesn't it? If I'm taking the trend on coffee from the August 2022 highs, and we've got a big level at 175. So absolutely, in the short term, I think there is scope for coffee to move higher. So this is on the hourly chart. So for me, in the very short term, I'd be a buyer of coffee. Because only in the last few hours it's made a new high for this recovery. But I would think when it starts to push higher, there's a lot of congestion at like 168, 174 and a half. So I wonder if we'll see it, if it's just another dead cat bounce effectively and the market turns lower again. So I think it's interesting to keep an eye on, but I'd be wondering, is it going to run out of steam at 175? So for me, that trend in coffee is absolutely still down. China 50. So look at the China 50. There we go. Pushing higher. I think we did look at this on Friday, didn't we? I think that does to me look like, I'm sure I would have said the same thing on Friday, that it's broken out the downtrend, which does make me think perhaps we are going to see this S&P and NASDAQ break out the downtrends now, because so many other markets have, and the US is lagging behind, which I'm sure I said again on Friday. So again, for me, any weakness in the China A50, this index, looks like a buying opportunity. You know, if the thing got knocked back to 13.5, it still looks like a buy. Good support down at 12.7 from December. So that China A50 does look like it's turned the corner. Hang Seng, I'm guessing, is not going to look. Oh, this is the level, isn't it? 22.5 on the Hang Seng. So so for me, it needs to break 22.5 to suggest that trend is over. So for me, on the first day of weakness, I would go short. So let's have a look on Friday where the Hang Seng is. If between now and Friday, if it had a red day, I would go short with a stop above 22.5. Let's see. Let's see what happens. Good risk reward. Do you ever trade options? How do you think it compares to using leverage? I do, but in a different way. Because most people trade options. If you look at perhaps some of the US boards, discussion boards about stocks, they'll trade options because they can't trade CFDs and they can't trade spread bets in the US. So they use options as a leverage play on markets. And the first leverage trading I did in the early 90s was with options. So if I thought a market was going to go up, I'd buy a call option. If I thought the market was going to go down, I'd buy a put option. And I was trading the FTSE 100 index back then. And I was really bad at it. Because the problem with buying options is, if you buy a CFD or a spread bet and the market goes nowhere, you don't win or lose. But with an option, if you buy a call, let's say you bought a NASDAQ March 11,900 call, you want the market to go up. But the problem is, as every day goes on, your option is losing a bit of value. So the drawback of doing directional trading with options is you can still be right on market direction, but if you're not right quick enough, you can still lose money. Incredibly frustrating. So if you just Google time decay of options, it'll give you a bit more info. So for me, I would not use options for directional trading. I'd much rather use a CFD or a spread bet because you're not seeing the value of the thing you've bought erode just because time is running out. And I think, in my experience, when I put a trade on, the market, even when I'm right, the market always moves slower than I think it's going to move. And I think with options, if you're using them directionally, that's a major hindrance in my experience. But just Google time decay. Wall Street Bets, absolutely. Wall Street Bets, they love options on the Reddit Wall Street Bets, and they buy like S&P or SPY, the Spider, which is the S&P ETF. They buy S&P, effectively S&P options, with like 2 days to expiry, 3 days to expiry. Crazy. So the time thing is massively against you. But yeah, time is the killer when it comes to options. A leap is a different leap. Long-term option, because then it's like more of an investment, isn't it? I don't really know much about them, but time is less of a factor on leaps. Do you think Amazon is a short, or is it? Oh yeah, Phil's just said, again, it's a bit more of a US thing because they don't have access to the sort of things we do in the UK and continental Europe at least. In the US, they do have leveraged ETFs, so they have from memory, you can buy a 3 times leveraged oil ETF. So an exchange traded fund if oil moves $1, the fund moves $3. So that's one way of getting a directional bias. Or there's an inverse ETF where if oil falls $3, your ETF goes up $9. So, and but the way we are fortunate in the UK and Europe, we can trade it with directional things like CFDs and spread bets. It makes it much easier, in my experience. Right, Amazon. Talking about Amazon. Let's have a look at Amazon. What was the question? Is Amazon a short or is it breaking out? Let's take a look. What would you do on Amazon? I would go short. There you go. So it's slid now since November 21. So what was it? $188 a share. Well, it halved. Who'd have thought that? Amazon halved into December. So for me, again, because it is the first break of the little downtrend I've drawn since the summer, I would go short. So the only question for me, as usual, is a risk control one. Where does my stop loss go? And I probably want it above 105. So at $10 higher than where we are now. So for me, I'd go short. Clearly, if the NASDAQ starts breaking out and reversing its trend, then a lot of these tech stocks are probably going to start reversing as well. But for me, I would still be leaning towards being a seller of Amazon. Let's see. Hi David, I'd like to ask a very basic question. What is leverage really? There are some that say it's an actual loan and some others say that it's not. Well, it's a good question. If I don't have a trading platform open, but if for example, right, let's say let's buy Amazon. I want to buy 1,000 Amazon, okay, at $97. If I want to buy the stock, I want to buy 1,000 Amazon at 97. I need $97,000 in my account. if I trade them on leverage with a contract for difference or a spread bet, if you're in the UK or Europe, I probably get 10 times leverage on stocks, whatever it is. So I can buy $97,000 of Amazon and only put up a tenth of that value. So I put up $9,700 but control a £97,000 position. So, I mean, it's not really a loan. In effect, you are borrowing the money, but basically you put down a small amount of money and you control a much bigger position. You do pay financing every day, so those costs have gone up as interest rates have gone up, but that's leverage. You put down X and you can control 10X in terms of your position. That's how it works. But it's a fair question because it's one of those things, I think, that if you do it for a while, we all take for granted, but it can take a lot of getting your head around in the beginning. But you don't have that money arrive in your account to go and buy the stock. You want to buy $97,000 worth of Amazon. If you're trading on leverage, you only need $9,700 and perhaps a bit more in your account to do it. But no, it's a fair question. Right, what have we got? I'm going to have to wrap things up soon. Yeah, someone's also explaining the leverage thing, and I think we're done, aren't we? I've got to rush tonight because I've double booked something tonight, so I do need to wrap it up. But so for me, a quick look: stock indices, S&P and Nasdaq. Are they going to break their downtrends properly and break these big levels? I am not convinced just yet. Oil, I think, is the interesting market because, again, it's backed away from that $84 mark, and the sort of bit of a left field market is pounding against the dollar because, again, it's run out of steam at 124.50. So really interesting up here. So we're going to wrap things up there. I'll do it all again on Friday, a bit more relaxed pace on Friday, 2:30 UK time. We'll see how these markets are. So Trustpilot, check out the reviews for the trading course, David Jones Trading on Trustpilot. Weekly newsletter, go to the website, go to the bottom of the website and sign up, send it out on a Saturday morning. Any questions, drop them an email, and we'll leave things there. That's it. Enjoy the rest of your evening. Thanks for coming along, and if you're around on Friday,